What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So welcome to Friday. The Bitcoin halving is only a few hours away, and Bitcoin so far managed to stay above 60K and is trading around $64,000. There's been a lot of talks about the Bitcoin mining stocks and what happens to them post-halving. One of those stocks is Riot Platform, which for the past month has been sliding lower, down 17.67% since I last covered them a month ago. But it did manage to close the week in the green with a tiny gain of 0.33%. But you know what? A gain is a gain, so I'll take it. Though it's been a rough start of the year with the stock down nearly 41% so far, Riot Platform has delivered on a major milestone this week, and their CEO was in an interview recently discussing the post-halving outlook for Riot. And so in today's video, I'll go over the latest news that dropped. We'll then take a look at the current analyst consensus, a major change here to note, and I'll close with what I'm personally doing as far as buying, holding, or selling. As always, this is not to be taken as financial advice. I am not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on anything pertinent I'll be sharing. Drop this video an early like if you haven't already, and smash that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. Earlier this week, Jason Les, Riot Platform CEO, was on Yahoo Finance discussing the upcoming Bitcoin halving and its impact on their business. Specifically, he was asked how revenue would be impacted given the block reward emission is set to be cut in half instantly post-halving. Here's what he had to say. Take a listen.
Help explain this to us, because when the halving happens, the amount of Bitcoin you will get for mining each Bitcoin will be about half what it is right now. How does that not just simply cut your revenue in half?
Well, it immediately does cut revenue in half for miners. So it's always a rough patch of volatility that we go through. But the fact is, if you look past some previous halvings, we have seen huge appreciations in price in the 12 to 18 months following the halving. And in fact, this case, it's a very unique circumstance. We've seen Bitcoin reach a new all-time high even before this halving has occurred. So I think there's a compelling investment thesis with Bitcoin. I think the world community is seeing that. And while the halving from a Bitcoin block reward perspective is a cut in half of our rewards, I think we're in a very bullish scenario for price appreciation in the years to come here.
As he said, revenue is indeed going to be cut in half instantly, which may sound scary at first, until you realize two important facts. First, let's hit on the price appreciation of Bitcoin Jason is referring to. If you look at each of the past halving events, we consistently saw a significant price appreciation a year out post-halving. The 2012 halving led to an 8,069% increase. The 2016 halving led to a 284% increase, and the 2020 halving resulted in a 559% increase for the price of Bitcoin. Now, keep in mind that none of those events had institutional interest pumping billions of dollars into Bitcoin. And in case you're wondering why it takes about a year for that price appreciation to occur, well, generally speaking, it takes about 6 to 9 months for the supply shock to actually hit. Then, and only then, do you see the parabolic rise in price as a result of the imbalance in supply and demand due to the demand outstripping the available supply. This then brings on the second important point. Riot Platform cost to mine Bitcoin prior to this halving is $7,539. That cost will instantly double post-halving to just over $15,000. But here's the interesting thing. Even if Bitcoin fell further, so let's get crazy and say that we temporarily drop as low as $30,000, that's still a 50% margin on mining each coin. So they're going to be just fine post-halving. Now, on the flip side, should the price of Bitcoin climb similarly to how it has in previous halving events, this would ultimately result in a significant improvement in revenue growth over the coming quarters. The point here is that Riot Platform, by prioritizing achieving top-of-class efficiency when mining Bitcoin, finds itself in a pretty compelling position to benefit greatly post-halving. And so for them, it's less about surviving the halving and much more about how they set themselves up to thrive post-halving. During the interview, Jason touched on another important steps they've taken. Take a listen.
And Jason, have you made any changes, kind of pulled any levers in preparation for that halving for the business?
The preparation for a halving really comes years before it happens. So I would say Riot prepared for this halving by being focused on having a very low energy cost. In 2023, we had a energy cost of 2.2 cents per kilowatt hour. It's one of the lowest in the industries. And years ago, we started building a new facility that comes online this month. So this facility has expansion, and it's where we're deploying the latest, greatest, most efficient machines out on the market. So we prepared for this halving years ago, and the decisions we make today are us preparing for the halving that'll come 4 years from now in 2028.
The facility he mentioned is the new Corsicana plant that just got energized yesterday. With this new facility, Riot Platform is executing on their guidance to increase the production hash rate to 31 exahash by the end of 2024. As of March this year, Riot Platform had a deployed hash rate of 12.4 exahash per second. And so to put it simply, Riot is set to over double its hash rate this year while maintaining a low mining cost, which in turns will benefit its margin greatly. And so when you think of it that way and realize what they've been up to, it's not hard to understand what yet another analyst upgraded them with a buy rating just this week. The last time we spoke, Riot had a total of 8 analysts covering the stock. That number has now increased to 10 with a consensus recommended rating of a strong buy. That rating is made up solely of 10 buy ratings, meaning that the only hold rating during the last check-in is now also a buy. That is super bullish. The high end of the range is unchanged at $25.50. The low end of the range has, however, decreased slightly to $15.50 from $17 prior. The average consensus price target has also decreased from $20.25 to now $19.65. That said, because of the recent decline in price, this implies a 137.03% increase from the current level. That's over double an expected return on investment and over triple when we hit the top end of the range. As much as the price decline leading into the halving has been painful, these projected returns post-halving are significant enough to more than offset the short-term retracement. And so with all that considered, my mindset and investment thesis on Riot Platform has not changed. It can seem counterintuitive to pour more money into a declining stock as it is declining. That said, when I look at the projected growth and the scaling of the business, along with the continued execution and the future direction, I can't help but see that Riot is more than likely set up for success and is very likely to benefit significantly over the coming year from this halving event. And for this reason, I have once again increased my position by another 100 shares, total with buy points at $9.99 for 50 shares and $8.25 for the other 50 shares. And with the closing price of $9.13 today, that last buy is now in the green. Can't be mad at that. Quickly taking a look at the technical chart, the stock did enter oversold territory a couple days back with RSI at 25.46. And as expected, we saw this bounce follow up, right? So that was the move up we saw today. There has been and continues to be a decent amount of uncertainty from investors at large about how Riot will perform post-halving, and this decline was a direct reflection of that. But personally, I believe that all of this is near-term noise, and judging by the analyst ratings, I'm not the only one who sees the longer term potential here, right? The bottom line for me, and really the last thing that I will say is this: the Bitcoin halving will soon pass, literally an hour or so away, and the uncertainty around it will settle. From there, the Riot stock price performance primary driver will once again be mostly predicated on the business performance and its ability to grow revenue and the mining margins. As far as I'm concerned, this short-term pain has helped me get set up for longer-term gains. And if I'm right, dollar cost averaging all along over the last few months will pay off in a major way. And so, bring on the Bitcoin halving. But on that note, that is it for me today. If you found value in my content, click the like button and share with others who you think could also benefit from it. For my newcomers, subscribe. It's free. And don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video and possibly during the week for an extra one. Till then, you can keep up with me here on Twitter, or I should say X according to my dad, so X. for crypto and NFT related news. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.